Hello, welcome you all to the panel discussion. We have with us today Prabir Purkayastha, who is currently the editor-in-chief of NewsClick. He has written on reforms in the power sector since the reforms have started. He has made the incisive insights on the Electricity Act 2003 and their far-reaching reforms, which curtailed the role of the state. He also has provided a holistic account on those reforms that turned electricity as a commodity that can be bought and sold in the markets. His work on the power sector include the book co-authored by Vijay Prashad, Enron Blowout, Corporate Capitalism and Theft of the Global Commons. Our other speaker, Dr. Tejal Kanitkar, is presently an associate professor in the Energy Environment Program, School of Natural Sciences and Engineering, National Institute of Advanced Studies. Her research areas include energy sector development and climate policy. She has written on the amendments to the new Electricity Act 2020 and primarily basically focusing on its drastic effects. She has also written extensively about the transitions in the energy sector over the years, the environment concerns and economic development. Now I invite Dr. Tejal Kanitkar to start presentation.
Thank you very much, Suresh, and thank you to SSER for this opportunity. I think it's an important discussion to have 30 years since the process started. I think the previous session of the SSER was on 30 years of economic liberalization. And the power sector was one of the first to be restructured and reformed. And so before I get into what actually happened and sort of the more contemporary developments in the power sector, a little bit of a background in terms of what the sector was, where the sector was before this entire process started. So the sector is in the concurrent list of the Indian Constitution. And so there's a reason for this. The responsibility to create the electricity infrastructure, expand access to energy, etc., was with the state electricity boards, as they were before the 1990s. Each state had a state electricity board that had the responsibility to do this. So the task of ensuring affordable electricity, reliable supply of power and growth, both industrial as well as in the other sectors, was that of the state government. The center was to provide the broad contours of policy, and it also was important, that role of the center, because the natural resources are not equitably distributed in all states. You have coal, for example, in certain states. Hydro resources are available in certain states. So it becomes important to have some kind of a role that the center also plays. So in the 1990s, in 1990, in fact, almost 90% of all utility scale power generation was in the public sector, either under the control of the central government or state-owned. And distribution of electricity was exclusively done by the state. As part of the larger process of economic reforms, and there was a certain amount of, there were a lot of changes that happened in the sector since between independence and 1990. I don't think we have the time to go into all of that. But there were, for example, there were certain elements of the sector that were highlighted when the process of structural reforms started taking place. And this was, of course, driven by the World Bank and the IMF. And the argument was that the power sector is in a crisis. There are too many subsidies. We cannot account for all the supply that is going into the power sector because a lot of the agricultural supply is not being monitored. It's not being metered. And a lot of the problems for what ails the power sector, and whether or not the power sector was ailing is another question altogether. But the argument was that it is public monopoly, which is a problem. And this was a general argument of the structural reforms that began in 1991. And to the power sector, this is how they applied. There's public monopoly. There are highly inefficient subsidies. And all of this is because there is political interference. The state plays too much of a role in making policy, regulating the sector. And so what we need is a radical financial and institutional restructuring of the sector. What does the financial restructuring involve? It means reduced budgetary support to the state electricity boards. That means increase in interest rates to loans that were given to the state electricity boards. Opening up of the sector to private investment, including foreign investment, and the elimination of subsidies. So what they call tariff rationalization, which means that the consumers have to pay what it costs to supply them with electricity. What did restructuring of the institutions mean? The ultimate aim was to, of course, privatize all segments of the power sector. Now, broadly, there are three segments. You have the generation of power, the transmission of power, which is the high voltage transmission of electricity from the generating plants to where the load is, the region where the load is. And the last segment is something like the retail segment, which is the distribution of power, which is from the transformer to your house or industry, etc. That is the last segment. So you basically privatize the transmission segment is understood to be a natural monopoly. So the focus really is on generation and distribution. You privatize both these segments, de-license, deregulate. Government is not to interfere other than making policy. You create what are called independent regulators, because before you have actually a market that is functional, you have to simulate market-like conditions and make sure that there is some kind of regulation. And so you have independent regulators who do that. So to do this, the first step was to unbundle. So you had a state electricity board that had to be broken down into separate companies. So then they were unbundled into generation companies, transmission companies, and distribution companies. Wherever possible, a further breakdown was necessary. So for example, in a lot of states, the generation companies themselves were also regionally broken down, because if the aim was to privatize, there would be no interest. Private players would not be interested in supplying electricity to an entire state. That's too messy, it's too big. And so this was broken down further. The state where I am in, for example, Karnataka, has 4 different distribution utilities, each in charge of a separate region. And then, of course, privatize each segment. Now, all of this was consolidated in the Electricity Act of 2003. This was passed by the first NDA government in 2003. And of course, there were some, the NDA lost the elections in 2004, and there was the UPA came to power. There was a common minimum program that drove the first UPA government's policies. And so therefore, there was some sort of withdrawal from what was implied in the Electricity Act of 2003. For example, one of the requirements of the common minimum program was to get rid of the elimination of subsidy clause. However, how it was changed was to change the wording to reduction of subsidies. So an eventual reduction of subsidies is necessary, but not an elimination. But since then, there has been a push again for various things that were envisaged as part of the reforms right at the beginning. Privatization, of course, and amendments keep on happening. So there was 2014, there's 2018, there's 2020. There's been a bill that has been introduced, drafted and redrafted multiple times since that time. And there have been attempts to sort of push the agenda to what it originally was quite a few times. So what has happened so far? There has been, if you look at the first decade of the reforms, this is in some sense summarized by the Enron experience, and Prabir has written quite extensively on it at that point of time. And I leave it to him to sort of talk about that a little bit more. But despite that experience, despite that example, which is somehow cited as the example of the first experience of reforms in the power sector, the growth of private what are known as independent power producers was low. And I'll talk about generation first, because today we do see some amount of privatization of the generation segment, while distribution still remains largely public owned. In the first decade, however, there was very slow growth of private IPPs. This was despite quite significant incentives. They were allowed, they were given risk protection, allowed high profitability, secure returns on equity, protection from all kinds of even currency variation risks. And all the risks, I mean, in the case of Enron, for example, all of the risks, except for the technical risks, were passed on to the state electricity boards. And so Enron was just one example. There were over 200, around 243 MOUs that were signed with private companies for about 90,000 megawatts. So to put that in context, we have an installed capacity of around 380,000 megawatts today. So these are the number of MOUs that were signed. But by the end of this decade, only about 15% of these IPPs could get even techno-economic clearance. So everybody started to, because there were severe shortages of electricity at this time. And so private producers, power producers smelt a profit here because there were those who had captive power plants were making profits during this time. And they were, of course, allowed a lot of incentives. And so everybody signed an MOU with the state government, even if your only experience was in manufacturing or making toothpaste, they had put in bids to generate power. Now, there is a big difference in making toothpaste versus generating electricity. But nevertheless, this was what happened. And in fact, in this decade, improvements, just efficiency improvements and new power plants of the public sector, despite reduced support, far exceeded what came from the private sector. However, that changed over a period of time because it takes time to set up a power plant and start generating. And so in the next decade, what you see is, of course, other changes in allied sectors. There were changes in the coal sector, and there were new gas policies. And of course, the fact that there was a lot of shortage was another added incentive for power producers to install power plants. And these shortages and the possibility of making high amounts, making high amounts of profits by selling power on the market was the only basis on which a lot of the public sector banks, in fact, gave loans to a lot of these independent power producers to come up with the new power capacity. So if you look at our current capacity, more than 50% of generation capacity is in fact less than 10 years old. Over 20% of generation capacity is in fact less than 5 years old. And today, of all the new capacity that has been added in the last 10 years, over 50% is private. About 45% is roughly equally divided between the central and the state sector. Now, what has happened with the new plants, however, is that their capital cost, whatever has been invested to build those plants, is yet to be recovered completely. And we all know now what we see in the generation segment of the power sector is a large number of non-performing assets. These are stressed assets. The loans to the banks cannot be returned. And so banks, public sector banks, have to write off the loans that were given to these IPPs. In fact, the standing committee report talks about how, in 2017, the estimate was that around 38,000 crores of NPAs were of thermal plants alone. And a significant proportion of these NPAs were of private plants that did not sign what is known as a long-term power purchase agreement with distribution utilities. So the idea was that they'll be able to sell power when there is shortage in the market, and and they will make money. And this is the basis, like I said, on which they were given loans. And now what you have is a huge amount of stressed assets in the power sector. There are high variable costs of these because it was very difficult to actually, for a lot of these independent power producers, to procure coal. And so they were also set up in places, in areas which were far away from the coal mines. And of course, markets could not predict the overall demand slump that occurred. And so energy demand, despite projections by various agencies, especially central agencies, did not pick up as much as expected. And we've seen in the last decade, for example, a severe, in the last 5 years, 5 to 6 years, a slowdown in demand. And this has directly impacted the power sector as well. If you don't have a demand for electricity, distribution utilities don't need to buy electricity from generation companies. Generation companies, unless they can sell their electricity, cannot recover the money that they have invested in those power plants. So this was one reason. Another reason was the tremendous growth of renewable energy. This is also private investment. And this investment is also further incentivized by providing policy sort of protection, in the sense that all renewable energy, for example, there is a no curtailment policy currently in place. So all renewable energy, if irrespective of its cost, when it is generated, has to be absorbed by the grid and by the distribution utility. And so therefore, if you have other sources of electricity that are cheaper, even if they're cheaper, they have to be backed down to accommodate renewable energy. All of these factors have led to a crisis in the generation segment of the electricity sector. So in any case, so for what we have seen, for example, in the most recent past, is that despite a lot of expectation that at least in generation you will have private investment, we essentially have investment in power plants funded by public money through public sector banks, which is now being written off after allowing the private developers to recover their money. But a lot of the burden which of the extra cost of a lot of these generation plants, because of when they came up, where they came up, what kind of coal linkages, some of them were dependent on expensive imported coal, for example. That money is being paid by consumers of electricity because all of it is passed through by tariff orders to consumers. So the entire claim that privatization is going to reduce money because you're going to infuse this amazing amount of competitiveness because of multiple players, there's been no longer any public monopoly. Those claims have fallen flat. In fact, we have seen an extreme increase in energy tariffs. I will very briefly touch upon what's happened in the distribution sector before I stop. I have 5 minutes. So, yeah, okay. In the distribution segment, while there was, like I said, unbundling, and you had this distribution companies also broken down into further by region, there was actually no privatization other than in Delhi, Mumbai, and Orissa. Now, and in none of these cases, privatization has been a success. Those in Delhi can speak about Delhi. I think Prabir will touch upon it, but we are all witness to what has happened in Delhi in terms of power tariffs over the years. In Mumbai also very recently, and even before that, you had Reliance first take over from BSES, and now you have Adani that has taken over from Reliance. You've seen protests against both these companies. Power energy tariffs have increased, they have not reduced. And Orissa, of course, is a big disaster, right from the beginning, you had Reliance, then it was reverted back. There were multiple attempts to privatize it. For a long time, it stayed with the Orissa government. Now, of course, the Tatas have stepped in to take over. But otherwise, privatization, the experience of privatization has been very poor. And of course, one must remember that Mumbai and Delhi have no agricultural consumption. These are cities where, the sticky problems of agricultural subsidies, etc., don't exist. And even there, you have a problem with private players. Odisha also doesn't have too much agricultural consumption, actually. And here also, nevertheless, you've had problems. In most other places, it was impossible. The private players are not even interested in supplying electricity. What they're interested in is the urban segments, the small urban segments. And what has happened, therefore, because large distribution companies could not be privatized, they started farming out sections of those distribution areas and appointed franchisees to deal with it. So Torrent Power, for example, took up franchising power in Bhiwandi, in some parts of Gujarat, in Agra. And so that's what they're interested in. They're interested in areas where they have industry, where consumers who can pay. And so what this results in is that the state electricity distribution utilities are left with the large amount of poor consumers who cannot pay the full cost of electricity. And the consumers who can pay and can cross-subsidize are lost to the franchisees or private distribution companies. And because you couldn't privatize as they wanted, the thrust in the amendments that have been proposed year after year, the last 3-4 years, 3 different amendments have been proposed, is different forms of trying to privatize the distribution segment. How do you separate it out? And the idea is that the state governments will deal with the poor consumers. They'll deal with the agricultural consumers. They'll deal with the poor rural consumers. The cities, urban consumers, commercial consumers, industrial consumers will either find their own ways of generating electricity through captive power generation, or they will be, given over to a private company to manage. And all of this is what the state electricity utilities are dealing with. And all of this is being pushed under a larger argument of how state electricity distribution companies are inefficient. They're unable to manage. There's political interference. State governments cannot deal with this. And so this will solve the problem. This is despite overwhelming empirical evidence across the country that, in fact, one is, of course, that it has not happened. And where it has happened, it has been a dismal failure. And the last point I want to make before I finish is one of cross-subsidy elimination. This has again, time and again, has been attempted to eliminate cross-subsidies, and in various ways. Now, despite the fact that states have some autonomy to decide, because they have to see how many poor consumers they have, how many consumers they would require support. You can't cut off electricity. If you cut off electricity, you're going to lose elections. It is not simply, and that is why a lot of commentators simply talk about electricity subsidies as populism. It is connected with the realities of our people. People can't afford the full cost of electricity. So state governments are obligated to provide it at a subsidized rate because it's a necessity. It's not a luxury, electricity. And nevertheless, the push from the center has always been to eliminate these subsidies. Now, and they've gone so far in certain amendments to, in fact, also dictate the rates at which subsidies must be reduced. And now, of course, the new game in town is direct benefit transfer. So they've said no cross subsidies, no subsidies, direct subsidies. You let people pay the full cost and let state governments, if they want to subsidize, let them subsidize, but let them transfer this money to consumers. And this is basically a large chunk of the subsidies to agricultural consumers. Now, asking farmers to pay electricity cost upfront in the hopes that state governments, and these are cash-strapped state governments, and you've seen what has happened in the COVID era, for example, post-GST especially, and the farmers are supposed to bear this cost upfront in the hopes that the state government at some point will reimburse these costs. If the costs are not reimbursed and if the farmers are unable to pay these costs, they are cut off. And there are various ways in which a lot of this is sought to be enforced through the new amendment bills. And the center, for example, has taken a disproportionate role in trying to enforce some of these mechanisms through various things. So in the last 30 years, I mean, let me sum up by saying in the last 30 years, there are multiple things that have been tried in the power sector, but the overwhelming evidence of the 30 years of power sector reforms has been what, in fact, people like Prabir have been saying right from the beginning, before they, in fact, started with the entire process, that this is not going to work. It's not a sector in which the markets can function. You need planning in the sector. You can't simply say overnight that, oh, I need power tomorrow, so let me set up some power plant so that I can get power tomorrow. You need planning in the sector. Markets, in fact, are likely to skew the situation towards scarcity even more. And we've seen this in other countries in different ways, that markets have in fact induced scarcity in systems where there was surplus power at one point of time. So it's not going to work. And this is exactly what has happened. Nevertheless, the push has always been, and this is true with successive governments of the Congress as well as the BJP, the push is to privatize, because there is a belief, this is not backed by any scientific empirical evidence, there is a belief that somehow markets will magically improve the situation of the sector. So let me stop here and hand over to Prabir. Thank you.
The advantage of having Tejal speak before I do is that she doesn't really leave me much to speak about. So I'll still try and do some generalizations on what she has spoken to give you a bird's eye view, so to say, of almost 75 years of the Indian grid and the original Indian Electricity Act of 1948 that was really steered in the parliament by Ambedkar. And in fact, it's a very interesting document to go back to see what his vision, and at the time the national vision of the electricity sector was. And if you take that into account, you will see that whatever Tejal was saying is actually reflected there. The electricity is a necessity. It has to go to all corners of the country. It has to be what is called a postal rate, which means it doesn't matter what is the cost of reaching the electricity to that part of the country. Because it's one country, every consumer has to pay the same price, whether it stays in a remote village or stays in an urban city. That should not determine what's the cost of electricity to him, particularly if you require industries to be distributed across the countries, not concentrated in a few places. You want employment to be generated in different parts of the country. And of course, you want agriculture to get the benefit of irrigation, which is where essentially you needed electricity for. So this was basically what Ambedkar called the postal tariff basis, which is that wherever you post a letter, it costs you the same amount. That was what was introduced originally in the Royal Post in UK, in Britain. So that's what the Indian Postal Service also did, that it doesn't matter what it costs to reach a letter. It doesn't matter what costs to reach you electricity. It should be placed and it should be the same price. So the country as a whole can access development, which was what the post-independence promise was. So where in the transformation of this to market-based, who can pay, he should get electricity, how much he can pay, he should get that much electricity. All of it is to move away from the fundamental vision of independence India, that we will develop our people and make resources accessible and available to them. And education and electricity were seen as the two critical elements in that growth. So I think that part of it we have to understand, that this was not simply a matter of market. It was basically the vision of India that you were talking about when you talked about the electricity sector. In 90s, in fact, when the reform started, it didn't really start with market reforms. It started that there is not enough money with the government, so we should let private capital come in, develop electricity, and we have to give them guaranteed returns, otherwise they will not invest. This was actually a, what shall I say, a promise of robber baron age, where you come in, make promises, you borrow from your banks. If you don't borrow from your banks, you say, I'll bring in the money. You take guarantee from your banks, which is what Enron did. And then with your money, they set up electricity generating plants, and you have to give them guarantees of rate of return. You have to give guarantees of the electricity costs. So essentially, they come with the ability to put a promise together. There was also what Enron said. We had a lot of teaching that we had to do. So they had to do education of the people. And we know that education cost who actually got educated in that. So all of that, when you take into account, it was really a guaranteed price for electricity. We provide the resources, we provide the market, we guarantee the market. And all of that was for bringing in supposedly capital, which they took out in the setting up of the plant itself. And you must understand how this all works. I have a plant which I set up at 2.5 crores per megawatt. I claim it is 6 crores. Okay, I take loans from your banks or guaranteed by your banks. So by the time the plant has landed in India, it has been set up, I have recovered my capital cost, which is maybe 20% of the cost of the whole project. That's how it is, 80% loans, 20% cost. So it's really what Indian capital is very efficient at, how to get loans and how to take out the money that they supposedly have invested before any production is started. And this is basically what the Enron model also was. This is really the robber baron model of capitalism. By the way, that is the way capitalism works. So anybody who tells you that capitalism works because rich people have saved a lot of money and then they invested and earn more money, so you are not rich because you don't save. No, that's not the way it works. It works because you have been able to loot the resources of the state, and that's what the capitalist promise is. I will loot, I'll put that loot into in projects which will create more loot for me. So that was essentially the Enron model. But Enron model had another interesting element, which was to say that we will change India's energy policies to gas and oil, but mainly gas. That was a liquefied LNG model, that we will buy LNG from the international market and that will be much cheaper for you, and that we will change India's energy to LNG, which is what actually they did both in California and they did in Texas, and also they tried it in United Kingdom. Unfortunately, or fortunately for us, the LNG market did not take off, and fortunately, we only suffered with one Enron. And we did not change to LNG, which we don't have access to, we don't produce it, and we would have been dependent on an international source of fuel for our energy sector. And that would have been a bigger disaster than what we have now. And in fact, there were other projects which did go over to the liquid fuel as well as to gas, but fortunately that didn't survive. So we had only one Enron disaster. By the way, we don't know what we have paid for it, because we have paid ultimately in international arbitration, we have paid a very large amount to General Electric, who took over from Enron. Enron fortunately collapsed, so we didn't really have to bear the burden of more Enrons. And General Electric took over Enron's project liabilities, and it, I think, got more than $1 billion from the Indian government. It has been what Indian government paid has been kept actually secret. It has not seen the light of the day. And by the way, for those who might remember, this was the 14-day government of Vajpayee. who gave the sovereign guarantees which made us liable for this. Without the sovereign guarantees, you could have expropriated their project without any consequences. Because there was sovereign guarantee, Government of India had to suffer that liability. I'm giving this little background that there have been a number of reforms, not just one. And what you see is the next was the 2003 Act, which Tejal has talked about in detail. So I'm not going to go over that. But there is another element why I want to add to what she has said, which is that, the state here has two English usages: state as state government and state as state responsibility. So electricity sector is a state responsibility. It's responsibility of the state as central government and state government. But when you talk about the state government, which is also the other way we use central versus state, then you must understand there is one difference between state as central government and state government, which is the central government in India is not a distributor. It does not deal with the consumer. In fact, it behaves as what is called as essentially as just a producer of electricity, and therefore in NTPC would be in that terms an independent power producer on par with any private producer in the country. So the first attempt of the 2003 Electricity Act was to separate the producers from transmission, as Tejal has already described, and of course, distribution. Now, distribution is the only one which faces the people, because they have to give electricity to the people, and the state government is liable to fail in elections if it does not provide electricity to the people or provides it at too high a price. But the central government is insulated from the consumers of electricity and from the distribution companies. They are only responsible for supplying. So NTPC can supply. Its interest lies in higher cost being paid to generators, and therefore, in that sense, the central government, instead of acting on behalf of the state as a whole, in fact, acts on behalf of the independent power producers, which also include NTPC and also NHPC. So this is the one central difference that is there between the two governments, that only one government, state government, is responsible finally for the consumer and the central government is not. And therefore, the burden of the electricity sector has been put more and more on the state governments as power producers, the central government, as well as the independent power producers who are private producers, who are being, as Tejal has talked about, have been bankrolled by our banks, by LIC, by other institutions. All that public money has gone to private power producers or to NTPC as well. While if you see the state sector's contribution to producing electricity has actually dwindled, but its liabilities to supply electricity to the people remain the same. So therefore, what it is facing is a scissor that demands of the people for more electricity and higher cost of supply. And here again, the reforms that are being talked about in terms of renewables, that has put an even extra burden on, again, the state governments, because as Tejal has explained, the responsibility of supplying electricity is with the state government, of course, but also accepting any renewables come at whatever be the cost. Of course, people may not realize that Modi government in Gujarat had contracted for 15 rupees per unit of electricity to the renewables for, I think, 25 to 30 years contracts, which is what, as Gujarat Chief Minister, Mr. Modi had struck. So we may talk about the Enron model, but the renewables in Gujarat started as an Enron model as well. But leaving that aside, and I think Adanis were at that point quite important in renewables, they still are. So the renewables costs have dropped. Definitely per unit of electricity produced today, renewables are much cheaper. The problem is not that. Problem is that they will not be able to supply both the daily variations that come with of electricity. Night you don't have solar. The wind may blow at its own sweet will. There is also large seasonal variations. And if we want to take that into account, as of now, what's happening is grid-connected batteries at very high costs are being put into the grid as a solution. The reality is they do not They are expensive solutions, which we are not taking into account when you're talking of renewables cost. But more importantly, they do not even have the seasonal capacity. So this is going to be a problem not only in India, but elsewhere too. At the moment, you can see Germany have a stilling of winds. They have cut nuclear. They want to go through natural gas into basically to reduce the carbon footprint. As I say, of course, it would consume twice or thrice as much electricity per capita as the Indians do. Then, of course, it's not a question of coal as clean or gas being more clean. It's a question of how much carbon dioxide do you emit. So burning twice as much gas as an Indian does not reduce your carbon footprint. But leaving those issues aside, the essential issue is they have chosen gas as the path. And of course, then you have the Ukraine issue now that they are dependent on Russian gas. And what do they do about it? If they fight with Russia, they'll have to get LNG at twice the price. So all of this means the electricity sector is also a very strategic sector. And in India, particularly when we are going through a transition, the renewable transition should have been with manufacturing capacity for building panels, public sector being involved in that. Don't forget, because we decided to buy from Indian sector, we got a judgment against us in the WTO that if it was a public sector production, this would not have happened. But if you say, I will buy electricity, you set it up, and I will give you some concession if you buy from India, that unfortunately in WTO rules doesn't work. But if they had said it's public sector, and if they had the ability to manufacture the panels in India on a much lower cost like the Chinese have done, just because they have simply extended their manufacturing capacity, you don't invest in that public sector. You don't want to invest in building the sector, yet you want to give protection and say that protection will automatically generate all of this. That doesn't work. And as we have seen, that renewables, a huge market that we created, the grid for renewables, actually benefited who we are now fighting, not physically, the occasional skirmishes take the Chinese. So all the people who say, these leftists are Chinese agents, they have had a policy by which actually the Chinese trade increases the kind of policies they do. Because what we are telling them, that what we are saying that should happen is build your infrastructure, build in capacities for producing power plants, build in capacities for producing solar, renewable energies, and plan for strengthening your grid at public expenditure rather than give it to Tatas, Birlas, Adanis, Ambanis, who at the end of the day do not plan what is required for the country. And overall terms, what we are seeing therefore is huge subsidies to them from the bank loans, which have turned bad, which are, what is it called? What assets they are called, I'm losing the term.
Non-performing assets.
Non-performing assets, a very neutral term, non-performing assets. So when the power producers become sick, then of course the loss becomes nationalized. When they make profits, the profits are privatized. This is the entire model that we have embarked upon. The problem is, if it did still solve the problems of the sector, I said, okay, the capitalists have gained more out of it than the people, but the people have gained something. But at the way it is going, we are only seeing continuous hemorrhaging of the electricity sector. And at the moment, the last myth that they have created is that we can separate electricity flowing through the wires for distribution from the wires itself. The wires where the capital cost has to be put will remain with the state government. The electricity flowing through it will belong to people who will buy and sell. So what we are deciding is some electricity traders will actually be called distribution companies, while the actual assets of the distribution sector will still vest with the public sector, which is the state government, not the central government. Again, you can see that state governments are to be made what is called balika bakra, while the central government washes his hands off and says, we will tell you how to do all of this, though we don't do it ourselves. So this is where the other new crisis is coming. Unfortunately, parties like AAP are very enamored of this market solving all problems, because at the end of the day, their ideological beliefs in the market, the infallibility of the market, the gods of the market being all knowing and all good, they share with the BJP, who have a mercantile orientation to it, while being very fond of the Adanis and the Ambanis as well. So I'm going to leave it at this stage, because unfortunately the problem that Tejal has and I have is that we know a little too much about the sector, so we don't seem to be able to stop talking about all the problems that is there. Broadly, what we are seeing is finally that all the policies they are doing are failing. But when it fails, they still hold out the chimera of a new policy which will somehow magically solve all the problems that have occurred. And that is why the new electricity amendment is being proposed, which will somehow, by separating the electricity from the wires, this myth, this will really solve all the problems, which means electricity traders will now come and be able to do more efficiently what the distribution companies cannot do. Now, there are two examples of this which has already been tried. One is in California in the 90s. Enron was the original architect of that, and it ended up disastrously, after which in California it was dismantled, and also no other state took it up except Texas. And Texas last winter had the result of that in I think in 8 days, they spent more on electricity than they had done through the whole year. And that's because distribution of electricity was also in a way that the market rate depended what was the scarcity, how much it could go up, and therefore in I think 8 days they paid huge amounts. And ultimately that bond was really borne by the consumer. And of course, for people who do not know, the Americans had this problem. The lines run through the roof, and when the temperature is below freezing point, those lines freeze if there is no continuous supply of water. So the lines froze, and the lines, when the water supply resumed, because it had really got suspended, there was no pumping, the pumps also had stopped. So when it resumed, the pipes broke. And the houses are not like our houses. You know, we have some seepage. It doesn't cost that much to repair. They're all built out of cardboard and what are they called, dry walls. So they had huge costs that I think a very large number of Texas citizens had to bear because of that freezing of the pipes. So the moral of the story is, if you think it works very efficiently, market, the latest example is Texas, how efficiently the market worked in distribution. That's exactly the policy which is also being suggested here, that essentially if market economics means that it will be more efficiently distributed by companies who will buy and sell electricity from production companies and sell it to the consumers. You just pay for the wires and you maintain the wires. That's the task of the state governments. I think this is the new disaster we are creating. So the essential point here is that we have to return to basics. Who do we provide electricity for? For the people. And if that has to be done, what is the best and cheapest way to do it? That is really the question for us. And if we want to look at what has happened in the Indian economy, we'll still see more than 50%, about 50% of the electricity that the generating capacity is with the state still, central government and state governments, about 50-50. Here again, you will see they supply, Tejal will have the figures, I think roughly about 70% of the energy that is fed into the grid, though it's only 50% in generating in capacity. They really, in terms of energy, they provide 70% because they really are the supplying. A lot of it is coal-based electricity, and they are base load stations except the hydro. And if we take that into account, that ultimately they are the ones who are not getting the money. The distribution companies who really have connected the consumers are not getting the money. The money is sought to be given to private power producers, now renewable private power producers, as well as finally to distribution companies, which will not have wires, no physical infrastructure, which will essentially be electricity traders. So this is back to the mercantile model of capitalism. I guess BJP has very close relationship with mercantile capitalism. That's something which runs very deep in their veins. So I think that's where we seem to be heading, particularly if the latest reform they have proposed go through. Hopefully, better sense will prevail. The states will put up a fight. We'll have to see. Now, a lot of the state governments are with the BJP. And as I said, parties like AAP do not understand this, but they believe in again, the magic of the market, or the gods of the market is all wise and solve all their problems. Thank you very much. I think I've taken more time than I should have, but that's the disadvantage of calling older people like me to come and speak.
Thank you, Prabir, but I think it provided a history of reforms so that it helped us understand the reforms over the times. And thank you, Tejal. It was very illuminating about how the acts have been introduced and how the reforms have been made to ensure each unit breaks down the production, the distribution, and how they have been broken down and sold altogether, and how these reforms at the end of the day are affecting the common citizens of the country. We have more than 6-7 questions here in the question. So I'll start by asking a couple of questions so that we can start the discussion from there and see how to go ahead. I think Prabir ended with how the new act and what the central government is trying to do to ensure the states follow the new power sector reforms. So for example, the states borrowing eligibility has been limited to just 3.5% of the GSDP in Telangana. So to ensure that the power sector reforms have been happening, and based on the recommendations of 15th Finance Commission. Apart from this, what are the other actions taken by the present union government to ensure the implementation of the power sector reforms?
I'm going to ask Tejal to answer that question.
Yeah.
Yeah, I think what you said. Sorry.
Yeah.
I think you said you'll ask 2-3 questions together.
Yeah, I was about.
Yeah.
Nachiket, one of the listener, has said that in the present scenario, what is the prescription of the speakers to fix the current quagmire in the sector? The current quagmire the sector is in, and will nationalization of power sector suffice, or does more need to be done? If more needs to be done, what should be that? Let's start with these questions, and then I'll ask along with that, what happened to the power subsidies? Did they even fall, or is it the case that both consumers and the government ended up spending more? If you look at the total expenditure on the power sector in generation, transmission, and distribution, and on subsidies, has public expenditure per unit of electricity gone up or down? Let's start with these questions, and then I'll keep asking the next.
Yeah. So let me start with the last question. The last question is, in some sense, we have to understand also what's happening in the power sector in the context of what's happening in the economy as a whole. It's not just the power sector is not removed from all of it. And we are a country where more people are getting connected to the grid. I mean, in some sense, there is an obligation, like what that Prabir has also said, to supply electricity. Otherwise, you have to face the electorate again. The state government is obligated to supply electricity to make sure that costs remain, in check, even if they are increasing. At least closer to elections, they have to reduce costs. And so the cost to state governments and the cost to the central government is a different question. But the cost to state governments has gone up because there is no way that you can, get rid of subsidy. What has happened is there have been attempts to reduce what is the cross subsidy in the sector. So you have, for example, there are sections of consumers, like the industrial consumers or richer commercial consumers or richer domestic consumers who pay more than what it costs to supply them with electricity. So industry, for example, it is the cheapest to supply electricity to, because it consumes electricity at a higher voltage, etc., etc. These, however, they are charged more than what it costs to supply them with electricity, and this extra amount is used to cross-subsidize those who cannot pay for electricity. Now, what was the policy was to reduce these cross subsidies. And the state governments were told that you want to provide subsidies, you want to declare free power, you pay for that money, you pay for that power. So the state government burden has increased, continuously. It has not gone down. So the question, whether the subsidies have gone down, cross subsidies have gone down. There were also other policies that were introduced, and this connects to the first question that you asked, Suresh, that a lot of industries were allowed to exit the system, exit the contracts that they had with the distribution company. So the distribution company is only supposed to provide backup if at all the industry needs it. But otherwise, the industry is allowed to generate its own power, or it is allowed to buy power through what is known as open access. So you're allowed at a certain cost to the transmission company to buy power from wherever it is that you want and procure it. You are not obligated to buy power from the local state electricity board. And so here is another instance of the state electricity companies losing out on the consumers who can actually pay. So, all the big industry, for example, it finds it cheaper in Maharashtra. Tata Motors may find it cheaper to buy electricity from some captive generator in Uttarakhand. The state electricity board will lose, Tata Motors as a major consumer, except for providing backup when it is needed. And so this is one aspect of how reforms were introduced. So you can't privatize directly, but you allow big consumers, big industries to be able to source power from wherever it is that they want. And so, that is one of the question was about nationalization. The sector, like we've said, is already public sector. I mean, the power sector is the entire distribution segment is with the governments, the state governments. There's no nationalization involved here. It's already nationalized in many, many senses. 50% of the power generation is by the public sector, either NTPC or state government owned power plants. The coal sector is with the government. Natural gas largely is ONGC, despite claims that the Krishna Godavari basin is going to start spurting out natural gas at the rate of I don't know what. There is none of those promises have been met, of course. So across the board, in fact, the energy sector is largely still with the in the public sector, in the public domain, except for renewable energy. Renewable energy generation is largely with the private sector. And why not? Because the renewable energy sector is guaranteed that all of the electricity that they produce, whether they produce it at 1 rupee or they produce it at 20 rupees, is going to be bought by the electricity companies. And so, I mean, it's a no-brainer. If I have to invest money, I will invest it in a wind plant or a solar plant, because it doesn't matter if my efficiencies are low. It doesn't matter whether I generate as much as I say or not. Whenever I can generate, that power is going to be bought at a much higher rate than it actually takes me to generate. Because if you see what's happening in most of the southern states, where 50% of the renewable energy is, the contracts are for 7 rupees, 8 rupees, 9 rupees. Only the more recent contracts are for lesser than that. Whereas by the time the plant comes up and you are selling electricity, the actual cost of that electricity is much less than what the contracted prices are. That's one of the reasons why Andhra, the state government said we are not going to honor these contracts. And so therefore, the central government has proposed what is known as a contract enforcement authority, which will now make sure that governments like Andhra, which are not under the BJP, will not be able to renege on iniquitous contracts. So to enforce iniquitous contracts, the central government has proposed now a new authority, which it will appoint to make sure that the state governments pay the money. So, there's a lot of things here, but whatever I've missed, let me, Prabir.
Yeah. The only thing I'd like to add is the iniquitous contracts, if they are struck by Tatas or by Adanis to supply electricity, of course, those can be reneged on, as we know already. And even in that case, the government or the central government is certainly going to be very soft on those reneging from those contracts. As you know, the super thermal or whatever not super thermal, something else it was called. Ultra mega power projects. But leaving that out, I'll just answer one small part of the questions that is addressed, which is, had the cost of electricity gone up or have they come down due to the new policies? The reality is that if we take all factors into account, this is the fastest growth of electricity prices have been during this so-called reform period. If you take starting from 1948 onwards, which is where I would say the electricity sector in India really starts, you will see the cost of electricity not going up, and that big tight control on it was one of the objectives of the government, till free market economics of this, what shall we say, variety took over, this loot variety took over. And what we now have, therefore, is the cost of generation, even for what would be called the fossil-fired plants, with lower capital cost, because they really got in Chinese plants at very low cost, and not from what was available from BHEL at a slightly higher cost. Even after getting low costs, they actually took contracts at higher prices, and ultimately the entire cost to the grid has been higher than in the earlier period. Again, this is figures that I remember. I did this calculation till about 2005 or so, 1990 to 2005. After that, those calculations will have to be done by Tejal. But if you look at the cost figures, there is no evidence to show the cost to the consumer has come down. In fact, the cost to the consumer has gone up, along with the fact that we have subsidized the banks to give bad loans to the power sector companies, for which actually those costs have been written off as non-performing assets. The banks have taken the losses, and even now there are losses which are coming up, which will be then put into what is this bad bank that has been now created. So if you take all this into account, you will see not only in the cost of electricity, but also the losses that in other ways we have underwritten the power sector has actually increased. So yes, if we put all that into account, and we had drawn up what were the essentially 5-year plans, we had planned the expansion of the sector, we had given the state governments some money to put in the electricity plants, even including renewables. We've created, like BHEL, we had created essentially what China did, basically recognizing the role of renewables. They put in a huge investment in making solar panels, and they have become the cheapest solar panel producers in the world. We were ahead of them, where the BHEL was producing power plants, turbines, boilers. They were behind us. Now, they have gone far ahead of us because they've invested in those areas. So if you don't invest in production equipment, then the cost is going to be at the end of it higher. That's the fundamental issue. And thinking markets will solve these problems magically is the bogus economics that we are being presented with. If you don't have capacities to manufacture, you at the end of it will become essentially a recipient of equipment goods coming from abroad, and your companies will not only lose, you will see finally you will be deindustrializing. Therefore, a lot of other consequences will also follow. So we shouldn't take the power sector only in isolation. But even if you take it to isolation, even if you take it purely by capitalist terms, what's the cost of electricity based on these policies, and you take that into account, you will see that this is the highest rise of electricity cost that we have seen after independence, has been in the last 20-25 years.
There are 2-3 questions related to agriculture. There was a time when many states were made to introduce metering of electricity usage in agriculture. What has been the experience of it? Ankur asks, what are your views on the policy of the feeder separation? What has been its impact on the agricultural power supply? Along with that, Nachiket has a question. There have been some interesting struggles by peasantry on the issue of electricity, most notably in Sikar. There was also considerable discussion of proposed electricity bill in the context of the recent farmer struggle. Do you think access to affordable power could be an issue on which people, working people, urban and rural poor, could be mobilized against the neoliberal reforms?
Again, the answer is very short. Yes, we can mobilize the people. The point is how to mobilize them, that it does not turn into don't pay your bills, because in that case we sink the state government's finances immediately. So I think those are some of the problems there. But yes, I think one of the farmers' issues which really came up, and I think Tejal pointed that out in her articles, is the fact that this is one of the key issues that they were going to be faced with, is the electric bills that they would get. And therefore, this is something which the farmers' movement did take into account, that yes, they are very much a stakeholder in this issue, as the word stakeholder is very popular these days. The second part of it is, it's an unfortunate issue that the subsidy of the electricity sector got connected to non-metering. And that has its own problems. Unfortunately, it started with the fact that we did not have enough electricity meters when this policy was introduced. And then it became really, non-metering became a demand by itself, because then, of course, the non-metered, unmetered supply can be used for other purposes as well as household lighting. Therefore, the feeder separation, etc., have come in. Those are essentially because the farmers do not trust the government. Once you start metering their supplies, then they believe that's a thin end of the wedge. That's why they are so much into saying we will not let meters be introduced. So it is not so much about meters, it's about distrust of what the government will do once they meter it. Therefore, separating of the meters and saying we'll provide electricity at 3 o'clock at night and up to 6 o'clock in the morning for the farmers, and otherwise they will not get supplies on those feeders. So there's a whole bunch of distortion which has taken place on that. How to resolve it is a political question, and it's really a matter of trust between the farmers and the state governments, particularly the state and the people in large.
I'll just add one thing to that. In terms of metering at individual consumers, while that was resisted in many places, it did still happen in some districts. But what did happen was metering agricultural transformers. Now, this was mandated by the regulatory commissions and the governments, and so metering transformers. And in many states, what they found was that what was really being said to be agricultural consumption was not necessarily agricultural consumption, but losses of the distribution utility. And one must understand that all of these losses are not necessarily down to, inefficient DISCOM, the inefficient distribution utilities, but the fact that it is challenging to provide electricity to a extremely scattered consumer base across the countryside. This is low voltage distribution lines that are going across villages with a few pumps scattered here and there. There are going to be losses. And so it's I think a lot of the understanding of what ails the power sector is, I'm sorry about that.
Not at all.
What ails the power sector is really, not understood in terms of the fact that there are technical challenges. There are a lot of technical challenges to be able to supply electricity in a country like ours. So the feeder separation, where it has happened, and just one additional point to what Prabir made, that earlier it was, of course, at night. And so this is also why farmers don't trust the government, is because while at one point when you didn't have electricity, you had shortages, you provided them electricity at night, 3 o'clock in the night to 3 o'clock in the morning to 6 o'clock in the morning. Now you have excess electricity during the solar rich hours during the day. So you're using agricultural consumption to balance the grid. So we've moved to the afternoon, and there are in fact now papers after papers on this saying that you actually can do this without too much battery storage. You can manage the excessive amounts of solar energy into the grid. Simply move agricultural consumption to the afternoon where you have high solar power. Now, the fact that your own government agricultural institutions also tell farmers not to irrigate in the middle of the day, you have high evapotranspiration losses, etc. That aside, you are now using agricultural consumption to balance the power sector. So it's almost as if it doesn't matter what the farmers want, what the farmers need. You can basically decide when they will get electricity and when they will irrigate or not irrigate their farms. So there is enough reason for them to not trust what the government does.
And we should therefore thank the farmers for taking electricity at night, when actually the surplus generation earlier, to balance the grid, and take electricity at the daytime. In fact, they should be paid to take electricity to balance the grid, in other words.
Yeah, so they're playing an important role in
grid
management.
So therefore, giving them free electricity makes sense as purely grid management terms.
Some people have argued that investments in renewable energy would have large multiplier effects to creation of employment, etc. What is your view on that? Also, is large-scale shift to renewable energy possible and desirable? Question. Or should India be moving to something like nuclear energy? Along with that, Biaso Ram has a question. Would it be financially viable to impart solar energy, then hydropower, considering the sustainability concept? Then when generation, Ravi Kumar has a question. When generation was made delicense, and generation of electricity was made delicensed and out of planning on one side and renewable high target to meet obligation rather than meeting demand, we see illusion of surplus capacity. How states are fighting this unplanned generation while integrating renewable? Any additional costs are bearing to integrate the renewable energy into the grid?
I think this will require a separate seminar if we have to answer relatively technical questions that have been asked. The only thing I would say, nuclear energy at the moment economically has not proven viable anywhere, unless you go to really Russia and Korea, South Korea, which seem to be making plants relatively cheaper. But if you look at the other countries, the cost of nuclear seems to be very high. And I don't think we have the ability to make nuclear as a mainstay of our support, of our electricity. That's not going to happen in terms of a transition to a low greenhouse gas emission path. So I think we'll have to go to renewables as the primary trajectory for low energy path. All this talk about how that all this can be done letting markets do it is bogus. If we want cost to be reduced, we have to plan capacities, we have to make the investment in a planned way so that there is a balance between what we need and what finally we actually get. So I think that's a much simpler question to look at. And I don't think that essentially there is any other path today in the long term towards energy, unless something like fusion materializes, which, since we used to be told when we were in the 70s that Solar energy was 10 years away. It took us 50 years to reach there. Now we are told fusion is 10 years away. So it can be 10 years, it can be 50 years. But yes, once we get there, then I think we'll solve our energy problem, possibly. But certainly, otherwise, at the moment, I prefer the fusion energy to be in the, as sun, not right now where we are.
In fact, there was, I heard somebody say that, 50 years ago, we were told that, once fusion happens, we've solved all our problems. So at that point of time, fusion was the energy of the future. It still is the energy of the future, irrespective. So we have to watch and wait for what happens there.
Yeah, solar was 10, nuclear was 50, fusion was 50. And in 50s, it had been told nuclear would be so cheap, we can throw away the meters.
Yeah, exactly. Yeah,
that was
so
told
nuclear
by
is not cheap, and I mean that is pretty clear. Even what we are looking at now in terms of the newer the extensions to, I think, Kaiga and even Kudankulam, the sunk costs already show us that the cost of electricity per unit is going to be pretty high. Of course, it also depends on whether you compare it, when you compare it with renewables, you have to compare it with renewables plus storage, because nuclear provides power for the entire day. It doesn't depend on the sun being there or wind deciding to blow or not. I think in some sense, I wouldn't dismiss the nuclear option as completely. I think it's an important option to keep on the radar. But of course, we have to, again, when it comes to domestic, Prabir has spoken about domestic manufacturing, domestic renewable energy equipment. On nuclear, we had a policy of I mean, that was supposed to be a program. If in any sector, in some sense, Indian technology and scientists have done well, despite severe sanctions, it is the nuclear energy sector. And unfortunately, with the 123 agreement and what followed thereafter, that policy was abandoned overnight by the nuclear establishment. So that's an issue. The other questions are technical, but I would say that the cost of renewable energy integration in southern India, and I've looked at the numbers here, is significant. And this is not even taking into account the balancing costs, the costs of grid integration, which I think there's a recent report of the Forum of Regulators that puts it at something like over a rupee, over a rupee per unit or something like that, grid integration costs alone. But simply the fact that you have cheaper electricity available, despite inflated coal costs, but you're forced to buy renewable energy because it's contracted at 6 rupees, etc., because it's available. Just this introduces a significant impact on the tariff, so much so that the tariffs that the consumers, domestic consumers, industrial consumers, and commercial consumers are paying in Karnataka and Tamil Nadu are higher or are about the same as the tariffs that people in Texas and California are paying today. And this is, of course, with the per capita incomes of Texas and California being almost more than 20 times more than the per capita incomes of consumers in Tamil Nadu and Karnataka, despite whatever talks about Karnataka being the Silicon Valley, etc., etc. We're talking about the state as a whole. And so it has introduced significant costs. So we are paying those costs. It's the consumers who are paying the cost of that surplus power. And there's only so much that you can do this. Something has to give at some point.
Arpit has a question. Understand the problem of cost reduction that was the primary motive of power liberalization during the 1990s that hasn't been served. The reason behind that is also that the demand has increased many folds during this period. If the private participants hadn't entered into the picture, were there any public sector enterprises that could have catered to this demand?
Public sector banks paid all the public sector banks bore all the costs. So why do we call it the private sector entered? We gave private sector money, we gave loans, we gave them guaranteed contracts, and then we said private sector is entered. It is actually a misnomer. We just subsidize the private sector to do all of this. So I think this is the biggest issue. And by the way, 1990s was a complete failure of the private sector. They really, most of the projects did not produce and ultimately sunk. We bailed them out finally. Even now, that's the bailing out is what is going on. But we are bailing out financially. We are bailing out the banks and writing off the loans. So that's a different issue altogether. The question is very simple. Were there alternatives? Yes, we could have spent the money and given it to BHL to manufacture equipment, NTPC to set up plants, the state electricity boards to set up the plants. We would have had a much healthier electricity sector today. And the bank loans that we have written off in this particular way, we would not have written off. It's a huge investment that the Indian people have made, which is not seen because they're seen as non-performing assets of the banks, not our money.
Tejal, you want to add anything?
I said it in the talk itself,
Yeah.
that the public sector, in fact, added more power in the first decade of the reform than the private sector, despite multiple stops, despite reduced support to the public sector. And this is not, even if you don't consider that the private sector was in fact public because it was funded by public money, you even consider that as private, they didn't do anything. And right now also you have problems. If you see the plants that are performing well, these are plants that were built by the public sector that were taken over by the private sector later. The Dahanu plant, for example, is an example that Reliance got from BSES. So NTPC plants are still the better performing plants as compared to most other plants in the country. That's all I have to say.
I think we should close it now because Tejal's daughter is certainly getting restive, as my office is.
We'll just go with the last two questions. We'll just end it after that.
Yeah.
Can you share some examples of successful state-funded and managed electricity provisions from different regions of India? And one other question is, each household in Delhi is to each household in Delhi, the Delhi government is managed to give free electricity up to 200 units. Can this be replicated by governments in other states?
Well, simply Delhi government is lucky that it does not have what is called agriculture, and it has shall we say, the loot of the entire country. A significant part of it goes to urban Delhi or urban Delhiites. Okay, so they are wealthy people. So of course, you can get high tariffs from them to subsidize electricity. And also the electricity tariffs have been kept pretty high in Delhi. In fact, it is one of the higher tariffs in the country. And therefore, because you have high paying consumers, you have a lot of air conditioning load and heating load, the domestic consumers, because there's not much of industrial consumers and very little of agricultural consumers in Delhi. So you really have a very different scenario in Delhi than any other state. You want to talk about well-run state governments before the unbundling and all those things that took place. Andhra Pradesh was one of the most successful electricity boards, as also Maharashtra State Electricity Board. They were exemplars. They ran much better than what you see in most other private utilities at that time, which was BSES was not so bad, but you had Ahmedabad Electric Corporation and Calcutta Supply Corporation. All of them ran in urban areas. None of them had really agricultural load. So they were not really fair comparisons. But if you take Andhra Pradesh, you take Maharashtra, they were large grids at that time, and they had significant agricultural load as well as a significant amount of urban consumption as well. Both the boards were extremely efficient. Engineering terms, and I was really very much a part of the electricity sector at that time. I was designing a number of power plants. I did the plants in different parts of the country. And I can tell you, those plants are really well-run utilities. And most of what you see in the private sector has taken people from NTPC, and they're the ones running those plants as well. So this whole myth of inefficiency and so on is a product of the fact that the State Electricity Board made losses because of large agricultural loads. And the reason that Tejal talked about 3 privatization that took place, one was, of course, Mumbai, Bombay, other was Delhi, other was Orissa. Orissa's agricultural load was something like 7% when it was privatized. So if you take all the complex states with large agricultural loads, even states like Punjab, Haryana, ran quite efficiently. And in engineering terms, they were very well run utilities in terms of both what they did on the ground and in the power plants itself. I've gone to all these power plants, and I don't really, this whole myth about the sector, public sector being inefficient is essentially manufactured to justify privatization. And the fact that there were losses of the losses of the state utilities were high, state electricity boards were high, that's because they had to sustain agriculture. So that was really what the issue was. And without agriculture, of course, you could make a very successful electricity utility. But that was not the option that we had, because after all, agriculture is something you have to support in the country. So I think the mixing up the efficiency versus the losses are 2 different things. By efficiency, I mean engineering efficiency. And by losses, I mean financial losses. Yes, there were also large so-called distribution losses, but they were really controlled much more easily. What we called as losses was theft of electricity given to friendly industrialists, and of course, a lot of it was put in the name of agriculture. I think this whole thing could be discussed more in detail, but if we want to do 30 years of reforms, then it's difficult to drill down into these aspects.
Also, I think there is evidence that without privatization, I mean, most of these places, like we said, in states, distribution utilities are not privatized. And losses have reduced over the last 30 years. The grid has been strengthened. I mean, there's some amount of investment. Even with lower than expected investment, in fact, losses are reduced in public sector utilities. So that you need to privatize to reduce losses is not even supported by the evidence of the last 30 years at all.
Thank you. Thank you for the wonderful discussion. I request Jessini to join.
Tejal and Prabir, thank you so much for joining. And we had a very interesting session with you. We have run out of time, and also, as Prabir pointed out, it's a long discussion. We should have a second and a third session. In this series that we have planned, we would like to have other sectors, other issues to be brought in. So we request the audience to join us in the coming months on issues that we will discuss in this series of 30 years of economic reforms. Thank you very much. We look forward to your engagement with SSER in the coming days. Thank you and good night.